Hello, Dukascopy Forex TV and I, Rochelle Akufo, are here to bring you a fresh edition of the economic calendar. Here are the events that could stir the currency markets on Thursday, August 27th. Thursday's busy schedule begins at 10 after 6 a.m. with German GfK consumer sentiment for September. The index posted improvements across the board in August. Bloomberg releases August's retail PMI for the Eurozone at 8. Figures seem to be stuck below the neutral level of 50. July recorded a decrease both in year-on-year terms and as compared to the planned volumes. Most of the bloc's members are repeating the trend on a national level. More Eurozone news at the same time with publication of the M3 money supply report for July. M3 looks to be slowing its growth pace. In its bulletin for August, ECB evaluated June's numbers as compared to annual increase in interest on private sector loans as the multi-year bottom. British macroeconomic data follows with total business investment for the year's second quarter at 8:30 and CBI distributive trades for August at 10 GMT. Finalised first quarter business investment came below preliminary estimates. No serious improvements are in sight as demand is still pinned down, production capacity is not fully utilised and businesses remain unsure about the outlook. Distributive trades were on the soft side throughout the summer but stayed firmer than the year's first half suggested. Another slight decrease is consensus for August. Half past noon sees two important releases on the US economy, second quarter GDP report and weekly unemployment claims data. Gross domestic product contracted by 6.4% in the first quarter. This revision of the second quarter estimates is expected to slightly widen the previously released interim reading of 1% in the red. No changes forecasted for GDP deflator and PCE. Last unemployment report saw both initial and continuing claims increase by 15,000 and 2,000 respectively. This somewhat contradicts brighter views on the American job market, prompted by previously observed tendency for job cuts to decrease. However, it is premature to make far-going assumptions based on 1 week's data. A block of Japanese news encompassing CPI for August and July's household spending and unemployment stats closes the calendar at 11:30 p.m. July CPI data added to concerns that economic activity will be driven by deflationary expectations. Price contraction is already factored into the bond prices. However, surveys suggest that consumers are still predominantly anticipating inflation, though at a decreasing margin. Soft consumer sentiment and negative base effects are seen as key pressure sources that will continue driving Japanese household spending down. June's unemployment rate of 5.4% touched levels last seen in 2003. Almost 1 million people have lost jobs since January 2008, as Japan continues to face the worst crisis to hit the country since World War II. This was the summary of Thursday's likely influences. Watch us next time to stay up to date with Friday's schedule. Goodbye.